Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 18th of October. All right, now in the Asian session, we've had some Chinese data, the GDP, industrial production, retail sales. There's a bunch of data coming out. All came out pretty strong. Let me just come over to that calendar, actually. Now, what we can take from this is, a bit of a bounce back in the Chinese economy. That's really good for the Aussie and Kiwi in particular. I guess CAD, being a commodity currency, but Australia and New Zealand, China's their biggest export market, right? So it's very important for everything else there, and that's why these currencies are starting to move back to the top side now. But just give you a look at the charts here. You can start to see, this is a big step, and the Aussie seems to be going up a little bit more than the others. But funnily enough, the Euro, Sterling, Aussie, Kiwi generally correlate. The move on Sterling is pretty muted as it is on Kiwi, but Euro is making a comeback as well. And that looks like a bit more of an angry head than previously, right? So I'm not going to start predicting a move to the top side, but we need to be focused on the potential opportunities. Now, just a little step backwards. For those traders that were viewing yesterday, I was talking about the Canadian inflation numbers, right? I didn't really harp too much on about weak numbers because strong numbers would have been potentially a better trade with oil. But what we did get is, decent variance in the numbers. Okay, minus 0.1 on the negative side or on the weaker side. Now, why am I showing you this? Well, pretty much because I just want you to get the lesson that I was trying to convey yesterday, right? If I just come back to the charts, is because dollar CAD is a tricky one because oil is such a big component of what happens to it. So yeah, weak data, right? Dollar shoots upwards, but just after that, oil starts to rally, right? And that doesn't suit, right? So it really stalled the overall move. And that's something that you have to be aware of, maybe going down in future, right? It's exactly what I was talking about yesterday. Whatever happens on dollar CAD or the inflation numbers, you've got to keep an eye on oil because if it turns the other way, the trade is going to turn around and you definitely need to manage the position, right? So a bit of a lesson on that one. Now, let's just come back to the calendar and focus on where's the cash today, right? Well, where is the potential cash, I should say, not where it is. It'll depend on what numbers we get. Now, UK inflation numbers. Once again, another big inflation number. We've seen the US inflation numbers, the Canadian inflation numbers. We are looking at 6.6 for the inflation number, core inflation rate year on year 6%, and month on month 0.5%. So make sure you're keeping an eye on sterling if you're in the European session, and sterling crosses for that matter. Now, outside of that, Christine Lagarde is speaking, the ECB president. You want to keep an eye out for that. And then we come through the North American session. Building permits, housing starts. Of course, you can keep an eye on the gasoline stocks, especially with that Middle East situation going on and the price of oil whipping around the place. And then we've got a bunch of Fed stooges coming out to tell us the good oil about what's happening in the US, right? So to me, as far as fundamentals go, the UK inflation numbers are the definite go-to here, right? The rest of it, well, you got to pay attention, and that's somewhat difficult in these markets, where we get stalling markets, we get false starts, we get all these different things happening. So just focus on the key direction that we can see here across the board, right? Now, I'm on the wrong chart. Here we go. And what I'm talking about is, okay, I think this is even a potential better move. Last week with the US CPI numbers, we were talking about weak numbers and what that does for us, okay? It sends the dollar lower. To me, looks like all the good news is out in the dollar and it's stalling. The US dollar up move is stalling. We are seeing Euro come back. Well, sterling, I wouldn't say it's exactly coming back. It's more sideways. Aussie's coming back. Kiwi, it's barely picked itself up off the floor, but it's thereabouts. Dollar CAD, well, we can see what the CPI is doing. Oil is dominating. Dollar yen. Now, you'll notice when there is fresh news like the Middle East situation, the yen story goes to sleep, right? No one really cares. But once the Middle East situation is resolved, dollar yen will become the major issue again. And we are already starting to see this may be the first one to break. Dollar Swiss to the downside, right? that could be the catalyst for the move across the board. So I'll be looking very closely, redrawing my trend lines, okay, getting focused on where that next potential opportunity is. And to me, it's a weak dollar, right? It just lines up that way. So I'm just going through my charts. And this is all you need to be doing in between various events, is actually just tuning up your charts. Now, I'm a bit of a color freak, so I like to make sure my colors are correct. And I just changed those to red, so I know that they're actually the only support trend line on the downside. So we've got trend lines to work with. If I just clear the page here. Now we've got things to work with, right? You can see the pressure. And this is what I talk about when I say you need the technicals to build pressure. Well, they are building, and that it is looking a little bit more worrisome for the dollar than previously before the US CPI numbers, okay? Sterling, I can isolate the pairs. Like sterling, if there's a strong dollar number, sterling would be the one I'd be looking for because it's not really bouncing. And same probably for Kiwi. If we had weak US dollar numbers, well, Aussie topside, Euro topside would definitely be the go. Dollar Swiss looks like it wants to go down, so weak US numbers. I'll be leaving dollar CAD alone for the moment, as well as dollar yen, right? So to me, dollar Swiss, the dollar index, Euro and Aussie are probably the best pairs to be focusing on just at the moment, right? So, whoops. And if I just come across here, let me just clear that page. And if you have a look across the equity markets, right, you start to see a bit of a picture where, you know what, they aren't going down anymore, right? Well, NASDAQ sort of pretty much stalled. And if we come back and have a look at some of the key driving instruments of the market, right? It's one of those funny things, right? When the whole market's long, right, there's only one way to go, and that's down. The bond yields have been going up, but it looks like everyone is long, right? So the prices have been going up today, so the yields are slightly lower, but they are higher than last week. But you know what? We're not seeing the reaction on the dollar from the yields anymore. And you need to be aware of that, right? Because if you're sitting there watching the yields and you're like, wow, they're higher again. Well, you know what? This is one of those telltale signs. And like, if you know how the bond markets work, okay, price going up means yields lower. That's just for the Asian day. But overall, I think the market's saturated with the bond news and it's disconnecting from the dollar as the driving force, right? That's all I can see at the moment. We've got a bit of a risk off profile at the moment. And once again, because we're not seeing this matchup, where's my little pen again? Okay, this is an interesting one, right? Because you are seeing, okay, yields falling today. We see a risk off profile and the dollar is falling, right? This is not a classic risk off profile. Risk off is equities falling and the dollar rallying. So just be aware, this is more like traditional markets back in the 90s, okay? Early noughties, okay? 2000s for those ones that don't understand. So that's key to it, right? Understanding the disconnection now from the bonds to the dollar, or maybe it is the bond and the dollar, since the yields are falling slightly, maybe that's why the dollar's going down, right? So just think about what's connecting with what, okay? The bond's obviously very important, but at the moment we're seeing a bit of discombobulation across the various financial markets. And as we go through into this European session, keep an eye on Euro and Sterling, still struggling. Obviously, Aussie and Kiwi going up with the Chinese data. And I think we're starting to build into another big move somewhere. You know, wicked US numbers could be the catalyst for a potential decent move to the downside. So what does that do for us? Well, quite simple. Come over, have a look at your calendar and look at the potential events here that could disrupt the market. And what I'm talking about is we're talking, if I just get the pink pen up, weak numbers, okay? Building permits, housing starts, and then it'd be a great time for the Fed officials to chime in there as well. Don't forget Cook on the bottom. All right, guys, that's it from me. We are starting to see good technical pressure. That's good trading conditions. All right, all the best. Cheerio.